Market Call Tonight is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Welcome back. Let's take a look at top picks right now. Honeywell is the first one that you are recommending.
Right. So we think that the market looks okay, but there are some very special companies within the market that can give you some great attributes. And Honeywell is an industrial company that is basically in 3 major businesses: home automation, automotive efficiency, and energy efficiency in buildings. So almost everything that they make has a sensor or a controller in it that can connect through the web. Mm-hmm. So this is a part of the Internet of Things, things that will be connected devices. They are the leader in all of their businesses. They've grown their earnings about 12% a year over the last 10 years, so very consistent grower. They've grown their dividend at over 12% a year, and they should continue to 12 to 15% a year. If you think that things are going to continue to connect to the internet, Honeywell is an absolute leader in those 3 spaces.
Okay.
So
a little bit of a different twist on an industrial.
It is. It is.
All right, let's take a look at the next topic. It's BristolMyers.
So as I've talked a little bit about healthcare tonight. When we look at pharmaceutical companies, people look at the dividend yield and they look at the products and they make their choice.
Right.
Bristol-Myers is growing so much faster than all of the major pharmaceutical companies. It should be trading at a substantial premium, and it is trading at a premium.
Okay.
So they are known very well for Eliquis, which is a heart and stroke drug, but they are becoming very quickly the leader in immuno-oncology, which in effect teaches your cells to turn on cancer cells to eradicate them, as opposed to flooding your system with drugs that hurt everything.
Okay.
So that market could be a $25 to $50 billion market. So if you look out over the next number of years, next 5 years, Bristol-Myers will have a much higher growth rate than their peer group. So it's a company, again, that's paying a dividend that's very attractive, over 2%. It'll grow its dividend, again, over 10% a year, and they will have a very strong growth rate in their cash flow.
David, it looks to be trading at about 30 times.
Yep.
Very expensive.
You pay a premium for the best businesses, and they have a very clear long runway. As they get approvals with using this technology, they can expand the addressable market. So this is a company where I would expect that estimates will be too low consistently going forward, which means that the PE probably isn't as high as it looks to you.
Okay, all right, let's take a look at the next one. It's Broadcom.
Okay, I promised an alternative to Skyworks. Broadcom is the merger between Avago and Broadcom, both of them leaders in their market. So what is it today? They're the leader in RF chips, which are in, well, every Apple device. Their product offering is so strong, they were able to get a 2 to 3 year contract out of Apple, which Apple just does not do. So they have a locked and loaded position in the next generation of iPhone, the next generation of iPad, and that's an expanding market. The second market that they're in, like Honeywell, is automotive. And we know that cars are all becoming more connected to the internet. And so both of these markets are going to grow very quickly. They're going to generate about $5 billion in cash over the next year. It's generating a return on their capital of about 7%. It's a 1.3% dividend that'll grow about 10% a year again. And so this is a leader, and it's really locked in and is very clear runway going forward.
What's the risk with it? I'm assuming it's Apple sales, unit sales.
Well, yeah, I mean, obviously Apple has to execute. Apple, of course, is not their only customer. It's just the largest one out there.
Right.
And so they're going to have to continue to innovate. They're going to have to continue to lead. But leaders tend to continue to lead because it's easier to hire the best employees. They have the lowest cost of capital. They have a dominant position to begin with. And there's a lot of cost cutting to be done between these two companies as they put them together. So we think semiconductors are attractive, communications are attractive, RF is attractive.
Okay.
This is a good investment.
Interesting. I haven't looked at Broadcom in a long time, and it's up 300%. David, great to be with you. Thank you very much.
Thanks for having me.
A lot of insight and great ideas. And thank you very much for being with us as well. As always, please do consult a qualified financial advisor before making any investment decisions, and we hope to have you with us tomorrow.